What is going on, everybody? And in this video, we're providing you a state of the market and stock picks for January 6, 2023. So if that sounds like something you're interested in, consider subscribing, as we do provide daily and weekly updates to get you prepared for the day and the week ahead in this glorious market. Now, we got some interesting data tomorrow, but what's most important is tomorrow's non-farm payrolls pre-market 8:30 Eastern Standard Time. You're going to get those non-farms, and they're going to weigh a lot that could potentially break us out of the range that I'm talking about. We're on this 3,900 to 3,800 range. But what is interesting today, the data we got today, the U.S. private companies added more jobs than forecasted, and I mean a lot more. And with that being said, how is that going to play into non-farms? The thing is, you have to understand that good news is bad news for the market. If the Fed feel like the market can take more of a rate increase, it's going to give it more of a rate increase. It's essentially what Bullard pretty much announced today. Bullard was on today. Again, I don't know why he holds so much weight in what he says. He doesn't have a vote, but for whatever reason, when he comes on, the market moves. So with that being said, he's providing a lot of fluff and something that's an issue, because some of these CEOs are providing fluff that everything's okay, kind of like the administration, just to not cause panic. And in doing so, you get a lot of people believe that everything's okay, and then only to watch things are getting about ready to fold, and then the engine's about ready to seize. So we need to keep that in mind moving forward. Yes, I will play a rally. If we want to rally, I will play a rally. Again, I see that you need to be very adjustable in the markets. Again, the big trend is down, and so I am always shorting every pump. If I do go long, it's just essentially a DCAing into the stocks that I like in particular, that I know will be here for the next 5 to 10 years. It doesn't say I'm going to hold it for 5 or 10 years, but as long as they're around for that long, I am willing to invest in them for the long term. And again, I'm not pouring massive amounts in. I am slowly, gradually DCAing in, because I feel like we could still drop more. But then I still have the powder to be able to buy more. And that's something you need to always do when you are, if it is just investing, if you're not a trader like I am. I intraday and I also swing. I'm just an active trader in general, and I invest. I do all of them. So it just depends on the market sentiments, depends on a lot of different things I talk about, and kind of how I forecast things and moving forward. And I believe after this cycle, once we get that last move down, I believe there will be a big boom cycle following this. But the point is you got to be able to survive till the end of this thing. And so that's why I do this channel, to try to provide insight that I see on a daily basis. And what I see on a daily basis is where the move happens first. And then later on, you see it happens in the news. And then later on, you see it happen in reality, right? And so you see a lot of the moves and stuff here beforehand, before anything else. Like I said, stock market's been kind of the front runner, and I base my moves particularly in what the Fed is doing right now. Now, that can change. Not every market sentiment is going to be based around the Fed, but obviously we're living through a historic time. So the rate increases in inflation are a big deal right now. And the market changes all the time. It's a very dynamic. This is why I say you always have to be able to adjust, because any new piece of information can dramatically change the market. Then we could go extremely bullish, or we can go even more bearish. So you have to be mindful of that and be very adjustable to that. So with that being said, non-farms are going to be important tomorrow. They're going to hold a lot of weight. It's going to break us out. That's left to be seen. Again, the market really doesn't want to move. I think the market actually might be waiting on bank earnings. Again, if the banks, it's something I keep reiterating, or I'm saying in the past couple of days, the banks in value have been what has held up this market to this point. Tech has been nowhere to be found. Tech has been absolutely obliterated over the past year. If the banks roll over, if value rolls over because of bad earnings, it's going to put a big dent in the market. Is it going to take it down to the 3K mark that Goldman Sachs is talking about? I don't think it's going to have that much weight, but then anything is possible. Again, the more you have to realize too that the market is also numb to a lot of the bad things that are going on. The market does realize to an extent that things are bad. But how bad is the question, and why you need a bigger catalyst, a black swan event, for us to sink that low, if we're going to sink that low. And I think there is a big enough catalyst to do that. But the question is when does that happen? It's not saying it will happen. I mean, I think the chances are it's more likely going to happen. We'll just say the chances are very great, but nonetheless, there's still a chance it cannot happen. So you have to be mindful of that. So this is also why DCA and I scalp, because of the fact that doing any kind of swing trade in this market, there's too much volatility to do any really kind of true swing trading in this, unless you catch essentially an earnings rally, which the earnings rallies have been very off and very short-lived in this market. So nonetheless, it's a new market. It's a new way of learning. I got to take that aspect every day. But with that being said, going into tomorrow, non-farms are going to be huge. They're going to dictate, especially since if we had private companies saying there's more jobs than there is. I don't know how that statistics is drawn up, but the problem is that people are afraid of more rate increases because they're seeing what the damage of rate increases do. And yeah, so wait and see. In the next week, we have core. We do have some earning. I believe bank earnings do start next week. So I got to keep an eye on that. If not next week, it'll be the week after. I think Netflix is on the 20th. So we do have about 2 weeks before big tech. And normally we should have some bank earnings next week. So we'll take a look at that when we're going through this. So again, we're really watching, again, the 3,900 and roughly the 3,800. So the market's been floating around there. Nothing too crazy though, but we'll see what happens. This is a problem for bulls. So something I've been talking about is you don't want this. I've been talking about this dollar getting ready to rip up here. It's been consolidating for a while, almost a full month, and now it's starting to push back up. If this breaks back over 5, that's going to be a problem for the market. Essentially, the world economy has been suffering and been trying to keep up with the power of the dollar. If this thing breaks back over 5, it's going to be an issue for not just our economy. It's going to be an issue for the global economy. And we may look pretty right now, but it's going to hurt the rest of the economy. And the rest of the economy is eventually trying to take the world off of the dollar, right? You have Russia trying to do that by backing essentially cryptocurrencies with gold. People are and don't like the U.S. with the fact that its dollar is so strong right now, and there's nothing backing it, and so people are trying to get the world economy off the dollar, and so this is the issue that we have right now. So, with that being said, you don't want the dollar to break back over 105. That's going to be an issue. It could cause a black swan event. All we need is the Bank of England to fold. Again, they hold bonds, or we need the yen to crash, right? That's the last thing you want. They hold a ton of our bonds, so that's going to affect our market. You don't want these people to not succeed because it's going to affect our market. So with that being said, again, you have to understand bonds too. Something I talk about and keep reiterating every now and again is that bonds, it doesn't matter. Bonds go up, bonds go down, and how it affects the market, it doesn't matter. But it's the volatility at which the bonds move is which is an issue. The bonds move fast. People are selling bonds fast, or selling or buying bonds quickly. That's going to be an issue. It will fuel the move to whatever direction. So that could be that issue with the bonds could be fueling a downside move to the 3K mark for SPX. So that's something you have to consider moving forward. So again, something interesting to watch going into non-farms tomorrow. Tesla. Again, I do like Tesla a lot for the new patent, and I left my my studies on here. Now I don't keep a lot of studies on here. I keep the 20, the 50, and the 200. Don't use 100. 100 is more like a speed bump, in my opinion. The market will typically blast through the 100 and then go to the 200 sometimes. I'm not a big huge fan of the 100. Nonetheless, if you can see this massive gap here, and this is on the daily, you normally don't see massive gaps. Normally we try to retrace back up to those EMAs, but we're hardly even we haven't even attempted to try to pop. We attempted to try to pop a little bit here, but it has been a struggle to get any sort of bounce. There is a lot of fear in this market because I think people are worried about that next move coming, and then once that next move comes, then it's going to be an issue. So you have Tesla earnings on the 25th. So you got that on the 25th. So that's right directly at the end of the month. Then you got Netflix again. I think on the 20th. So we'll see here. But non-farms, I think, can break us out of here. Will Tesla continue to sink? I think tech might, in all honesty, tech takes such a beating, it might actually hold. Again, my focus would be more on the meat of the financials and value. They've been overextended. They've been running for about a whole quarter. Q4, they've been running pretty much up. If they do give out, that's where the meat of the move is going to be, in my opinion. Not saying that, again, tech can't sell. Tech can surely keep selling if it needs to. Again, Apple doesn't move a lot, but same problem. You're having this, essentially creating this huge gap between the 20 EMA and the market is falling off. That's how overextended we are. And the fact that once this thing actually, which makes me believe that we're just going to have one huge move down and then we're going to pop up and get heavily rejected. And if you know me at all, that's my favorite short to take. It's these way overextended sells, and then you get this huge, you're going to have this huge up candle, and it's going to run right into there like a brick wall, and it's going to bounce off like a dead cat bounce, and this thing is just going to straight slide right off. So I look for that bounce. I do have alerts set on Tesla and Apple for that. The question is if SPX is going to do the same or not, but we'll have to see moving forward. And then BA, again, massively overextended. It keeps running. This has bad earnings. This thing's going to sink bad, and I think that's what we're kind of setting up for. So you definitely have to be careful in these. Again, everybody's plowing their money into value and into financials. So we have to see. Again, now your new support is essentially the 197. We're hoping for our back test. This thing is in a back testing is continuing to run. So you definitely got to be careful there. And then you also have JPM. Again, still playing range. Their earnings is on the 13th, which I believe is next week. So the 13th. So on the 13th, which is next Friday, you got JPM. So that's going to be an issue. Again, that's going to give us insight into what's really going to happen here. They're on the 13th. They're also on the 13th. You got a lot of banks. No, they're on the 17th, the following week. So we'll get JPM earnings, and then we'll get Goldman Sachs the week after that. Kind of a weird schedule this year as far as how the banks are reporting. 13th for Bank of America. So you got two big banks next Friday. That is going to be extremely important on how we're going to play out. And it's going into a weekend, which typically, if there's any kind of earnings and they're going to be bad, you want it to go into a weekend. You don't want it to start in the beginning of the week, because that just means it's going to be massive selling. So I could see us selling massively potentially over next weekend, and then coming in on Monday and just a crater and have to dig our way out of it. So that's what will be interesting there. But nonetheless, moving forward, I kind of want to go into this. If you did make it this far, I do appreciate you. It is on a Thursday, so I know there's not a lot of people that do watch this far, but if you have watched this far, I do appreciate you. I'm going to share you essentially my pattern that I trade. I've traded a lot through last year and into this year, and it happened again today. Again, when you get tight ranges like this, I mean, it's not too tight because it's almost 100-point up and down. So it's got a nice range. You're not talking about like a 20-point range, a 10-point range. It's just way too tight. Like some of these days, it's just been way too tight to really do too much. But today you could probably even see that too. But the nice thing that happened, typically what's been going on this year is I talk about I call it essentially my gap move, right? And every day in the morning, the market could be pushing up or flat or whatever the case is, or it could gap down, gap up. I'm talking about when the market gaps up pre-market or gaps down pre-market. That means either there's a lot of buyers that are buying or a lot of sellers that are selling. There's a lot of sell pressure. So nonetheless, coming into the day, and then it's important to know what the news events are going on. Is if there's some major news events or catalysts like we've had lately, whether it's been core inflation or whether that's been something to do with Powell's announcement or whatever the case, maybe it's bad earnings or something, some kind of a bad news event that has a lot of weight in it. And then when that event occurs, you get, like today is a good example. You had some initial jobless claims, and it was over expectations, way over our expectations. So that means, well, maybe that the Fed can come in with more higher rates, and where is it going to put us at? Right, it's just going to put us in a worse hole than we're already in. So setting up to today, we coming right into that. Obviously, SPX is overnight's pretty much shut off, but when it opens up, you can see a gap down to here, and it fell quick. And then what I did watch, every time it does happen, this is why I like the 20 and the 50 EMA, because you get that cross back over the 20 and 50 and EMA. I look for the retest, and that's exactly what I did this morning. I looked for the retest, essentially hit roughly around that 38, 34. I took puts right there and rode that down. And you can tell I was watching price action. This is why price action is important, is if you're watching it, if you're seeing that there's a massive amount of sellers coming in, you can read tape if you want. I've been watching candles for so long that I could see it in the candles when the sellers move in. And so you can start seeing the sellers move in really heavy. So after that retest, it hardly even wanted to retrace. And so when it retraced up enough, I bought some puts, and then I essentially rode this all the way down. And knowing that this is a zone down here, I sold roughly around the 38.18 because I knew that we're coming into a support, and it's been a support for a couple days. So I wasn't expecting that the news was going to be enough that it would break this. So you have to be mindful of that. Again, there is a floor right here. There's a gap right here that still hasn't been filled, which tomorrow, if we do open below the 3,800, this thing can gap down pretty far and then start running from there. So we're going to have to see how this does play out tomorrow. But nonetheless, that is a typical move I watch, and I take that play almost every single time, and it's worked for me. Not saying it always does work. There has been times when the hopium comes in the market, and this thing will gap down and retrace and just start ripping up. And at that point, it's nonsense. But 9 out of 10 times, it's going to do this exact move. But again, you still have to have a place. You have to have risk management in place. So if that's your cue there, right, where that candle opens should be where essentially you're going to tag out, right? And so if it retraces to here and you find that there's a lot of movement in there, and you can even manage it in the risk in which you take that position. And this is why I like playing options. Well, because I have a variety of different options I can choose from with different prices that allows me to dictate my risk level going into that position. And if I feel like it's solid in the news ways is enough to, I think, push the market down at least further in the next 30 minutes, then I will manage my risk at that point. And today I felt like I saw the move coming in here, so I added a little bit more than I typically would on this particular move, because I've seen this move so many times that I tagged in and it essentially just dropped. And then I got out, and that was pretty much my day. I didn't touch the market the rest of the day. The market, obviously, I talked about this move. I did miss this move as it came back up. Something I talk about is you'll get a retracement after a break. You get a retracement. This is the retracement. You can also short this one as well. Works fairly good, but this is a quicker move. This move here is not to say that this isn't a quick move, but this happens a lot quicker. And when it wicks, you need to sell. You can't hold that because more than likely it's going to either one push back up and reverse, or especially when that's why I do supply and demand zones, because it was already sitting in the supply zone, so it was popping. Short it, come back down a supply zone, get out, and then more than likely, if it wants to continue back up to the demand zone, it can push back up or not. But again, those are the first I always like to play. I think especially this move here and the retracement on the candle. That's why I use the hourly candles, because you can see it a lot better. Where the lower time frames, they're too fast to try to judge, in my opinion. I think it gives a lot of fake outs, and so it's hard to read. But nonetheless, if you made that this far, that is my gift to you, and appreciate you. And that's pretty much it. We'll see what non-farms bring, and I'll see you guys on a weekly update. Peace.